Stocks yesterday extended their longest stretch of losses since November amid concern that the U.S. recovery is clearly faltering. Paul Hickey says investors are focused on big picture themes despite a strong earnings season. He is right beside me here in the newsroom. Paul, by the way, is the co-founder of Bespoke Investment Group. He is right here. Paul, thanks so much for joining us. Huge sell-off day yesterday. The Dow, the S&P 500, the NASDAQ, all down more than 2%. S&P's worst day this whole year so far. What are the markets telling us?
The markets are telling us, and we touched on this a little bit last week, is the fact that while this debt discussion was caused a lot of anxiety among investors, it was a distraction. On what the real issue here, though, is we have an economy that's showing weaker than expected data than anyone was expecting. And
yesterday, I feel like that manufacturing data was like a nail in the coffin.
Right, and what we see is the pace of economic reports that we've been seeing over the last 2 months. We haven't had that broad and that many weaker than expected reports. The only other period in the last 10 years where we've seen that is in the aftermath of Lehman. So, I mean, we're not quite there yet. That was a big drop.
But you're saying where all economic data points are just clearly pointing to a slowdown.
Right, and expectations still haven't caught up with the reality.
And of course, this week is a huge focus. At the end of the week, we get that jobs report on Friday. And I know last time it shocked a lot of people to see that 9.2%.
Right, and there's no one thinking that we're going to have any good news out of the jobs report Friday. Expectations are very low. But we did get a slightly better than expected initial jobless claims report last week. So we'll be watching that on Thursday. The ADP report people will be watching today, although its record over the last few months has been spotty at best.
Paul, before we came into this earnings season, though, you had a lot of people saying, okay, the earnings are doing well. Corporate America has a lot of cash on the balance sheet. So there's room for optimism. Where did that argument go?
Well, the argument is still there. Earnings have been good, and we've actually seen the earnings season do better over the last week.
But comparatively better against last year.
Right. Well, and just pace of better than expected earnings. But the real problem here is the bigger picture things. We have the economy, which is very weak. We have Europe, which is a mess. Besides the Swiss central bank, every economy is trying to take an attitude of thrift here. And then there's zero positive sentiment out there. Corporate America has no faith in Washington. You look at all the conference calls going on. Every CEO seems to blame Washington. And while that may just be a convenient scapegoat, it gives them an excuse to put the blame on somebody. And it's just another reason for companies to sit on their hands.
And you feel like there's just clearly this lack of confidence. And to your point, we haven't seen this since Lehman Brothers was allowed to go under.
Right. There's very little confidence. Just looking at there's a complete adversity to stocks in the last hour of trading. We haven't seen the sell-offs in the late day that we've been seeing over the last 2 months. We haven't seen that negative sentiment since the early 80s. So investors just don't want to hold anything overnight because they don't know what to expect.
They don't know what to expect. Yeah, you can feel that, as you mentioned. That last hour of trade is always particularly rocky. Paul Hickey, thanks so much for coming in. Paul joining us. He is the co-founder of Bespoke Investment Group.